And welcome back to the Independent Investor Channel. I know we've been off for a couple of weeks, but how excited I am to put down on this product. I have missed it. I've been absolutely crazy busy, but I take this project very, very seriously. The power to change lives through the message that we're talking about, really in the face of what society would have you believe is life-changing activities. You know, people talk about winning the lottery or coming into a sum of money, and somehow that is projected to change your life for the better. I'm here to tell you, most of those scenarios, as fun as it would be in the short term, without proper discipline and mental aptitude to understand how to care for wealth, you're doomed. It's just not going to happen for you. Furthermore, I would consider that people need to spend way more time in this life looking for those things that absolutely will change your life. Have some kids, find a significant other that you can stand to be around, or actually, dare I suggest, want to be around. Those are things that'll change your life for the better. There's no doubt in my mind. When we talk about the financial topic, it is all ever apparent to me how confused people are by this topic, and how this channel represents an opportunity for people to make their way in. And for every dollar earned for you is a pledge or step in the right way or the right direction for the collective whole. Very powerful. I got an email this morning. I got paid a dividend of 82 cents. Oh, Ryan, that's crazy. I was joking with my brother this morning. I said, if I could just do that a million times over, I'd be a millionaire. The deeper systemic idea behind the dividend portfolios, that of which are available through the channel. You can check those out. I have since transitioned dividend portfolio number two, and I've also made that available. That's around 150 stocks, dividend payers that unfortunately I would have jammed them all into one portfolio with M1 Finance. But unfortunately, they capped the limit in each of the respective accounts. And I wanted to take advantage of the fact that I have three accounts started with M1 Finance. The one is the sector portfolio that I've shared openly over the last couple of years in the channel, and it's done quite well. We're just absolutely kicking ass. There's a fundamental theme that I really want you to take away from that. Um, I invest my money. I declare to you that we're kicking ass. This isn't a braggadocious message insofar as I come on and you guys look at me like I'm some sort of guru in the stock market. Far from it. I am just a regular fella. I put on my boots, my pants the same way as everybody else. I go and I work a job, that of which I enjoy, which is another one of those things that can actually, over the long term, actually be life changing for the positive. In other words, if somebody were to come up and punch me in the face and be like, Ryan, your life's about to change, you're going to win the lottery. That's not really the shock factor that I would wish upon anybody out there. Rather, it be to find something that you enjoy doing, that you feel motivated to wake up and go and pursue, something that you can actually find some upward mobility in, and take some comfort, solace, and some appreciation, and some self gratification in the fact that you do have that upward mobility in your life, and in that aspect of professional development, have that ability to pursue those ends. That's going to make a far greater difference for the masses out there that I speak to, or those people who make their way into the channel, who we are looking to make a difference for. Okay. If everybody understood at least the level of investing that I have learned over the last going on 30 years of investing, we would have no need for this project, because there are misconceptions about who can succeed in investing. There are misconceptions on who is eligible to invest. There are misconceptions on how to invest. There are misconceptions that would have you believe that somehow you need to gain some level of expertise to outsmart or outthink or outmaneuver financial markets. All of that's wrong. It's just dead wrong. I was on the floor of the stock exchange this morning for the fourth time in my career. Just this morning was a little bit more special for me. I actually went with my brother this time. I don't know if that was a first, but really cool. We kind of got caught up there talking to a floor trader that had been working since 1980. Had went through the crash of 1987, had went through the dot-com crisis 99 to 2000, and could remember with amazing detail the transformation on the exchange itself, and just was a pleasant gentleman to speak with. But you know, of course, in my form and fashion, I always like to get people's insights on stock market investing, and what greater place to get that type of insight than the floor of the mecca of it all in the world, the New York Stock Exchange. And he said, if I were just going to tell anybody this, I would tell them to go out and seek out the services of a financial planner, whether it be with Morgan Stanley or whether it be with Goldman Sachs. And it's a sentiment that I pushed back on a little bit. I said, well, there are products now that make it easier. I was really being way above board, with my careful disagreement with that application. It's not wrong. Doesn't mean it's right either. I hate to talk definitives when we're talking about finances, but my response was, look, I mean, if you could just buy the SPY or buy a derivative of the S&P 500, if you can tell me what type of rigor needs to go into that, or what type of hokey pokey you need to play with owning the S&P 500, or how many times you need to turn around 3 times and touch your nose and then jump through a flaming hoop of fire, to get that investment right, when the truth of the matter is, all you have to do is own the asset. I repeat again, all you have to do is own the asset. Hold on, Ryan, time out. I'm confused here. You just said that I needed to play hokey pokey, touch my nose, and jump through a flaming fire hoop. You're really need to listen up and understand, and just sit back and say, okay, Ryan mentioned the S&P. He was debating an individual on the floor of the exchange who contended that, and this must be the expert of all, to go out and seek the services of a financial planner, that of which you, in fact, will pay for. And the investing game has changed so much, in that you guys have got the guys like myself who come onto YouTube and talk willingly and openly about the psychology and the philosophy of financial markets, that of which is an infinite topic. Infinite topic. Buying the S&P 500, that's about 2 minutes and 38 seconds of a topic, if that. I could probably summarize it and do it in a short and give you 30 seconds of just go buy the S&P 500, fund it up over time, and you will be much, much better off in retirement than if you had never invested at all. That was about 18 seconds. No hokey pokey. You don't need Phyllis or Harold's advice from next door. You don't need the expert at Goldman Sachs to suggest that you enter into a low cost product like that. You just need something that we're going to kind of talk about tonight. And I want you to separate in your mind what you think you understand about stock market investing. And I want you to resonate with this idea of making the conversation about money more open. I want you to not be embarrassed by your money. I want you to stand up for yourself and say, you know what, I don't need to spend like an asshole. I do have a good job, that of which I have earned. And by nature of my choice to pursue that end, I have earned the opportunity to enjoy surplus capital in my budget. If we could all be so lucky as we are, and a lot of the other countries in this world that are civilized and not struggling, okay, I think it is fair to acknowledge the conflict that is going on in the world. It's ironic to see what has been fairly dismal markets over the last 3 years overshadowed over the last couple of weeks by a stock market that has been absolutely on fire. It's been on fire. Subjecting my money over the last 3 years to the whims of the stock market would have lent itself to the last couple of weeks for me, which has seen the portfolio swing a $50,000 bill. I don't really shake a stick at that stuff anymore. It's a program. I invest knowing that the plan will eventually pay off. And I know that there is a fundamental discipline to investing to suggest that, um, throwing in the towel and subjecting your money to the short-term whims or pitfalls in the market is absolutely a futile effort. I had a great conversation this morning that kind of proves my point over and over and over again. You guys who have been with the channel have evolved significantly with me. Certainly have watched me engage in a less than perfect pursuance of wealth. That's for sure on the channel, and opportunities that I share through the channels to try to take a strategic shot. If there's any motivation you can get from me, and if you sense that I am aggressive in my pursuit of financial success. I'm already successful and have been for quite some many years on other fronts: professional, personal, dietary, health and fitness, well-being, things of that nature. Very well set in my self-actualization phase in my life. I'm very happy to the point where I don't really need to buy a whole hell of a lot. I spend way more on stock market equities and DCAing the portfolios than any other expenditure in my life at this point. And say something kind of gangster on my part, it's not for me. It's for the kids and it's for the wife. You guys think I'm joking? I'm dead set. It can kind of give you some ideas as to why we do what we do. We're going to talk about that. And I'm going to pose some rhetorical questions for you that may in fact challenge what you think you understand about money. Give you the green light as an independent investor to understand that it is okay to not only challenge others, but to challenge the status quo in how you should be behaving with your money, what habits you should be subjecting yourself to, what types of social norms you should just automatically buy into without any type of questioning of said buy-in to that status quo. The more independent you can be with your thought, the more you can understand what those life-changing things are, and not sitting around and waiting for those life-changing things to happen to you so you can have your buddies congratulate you because you've just had a life-changing event, right? Because you were patient enough to sit on your ass for your life and wait for those things to happen. You win the lottery, I don't know. Maybe you sell a used car and you make $6,000 and you think somehow that's the end all be all. We need to expand our thought into understanding that the power of money takes on multiple forms, and not just buy into this idea, which is very easy to do if you are stuck in a habitual cycle of being paid dollars only to see those dollars paid out over time. Very important to understand that if you can intercept those dollars from yourself and understand the buckets of allocation for each of those dollars that you make on the inflow side of it, that the outflow won't have such a negative effect over your pay. In other words, you find yourself paid down on everything, but you also have everything spent down as well, and you find yourself stuck in waiting until the next 2 week paycheck or month paycheck down the line. Okay, are those habits able to be broken? Can they be broken? I think there's a lot of people out there with mental blocks in that they don't feel like this type of program is accessible for themselves. The idea of a new version of themselves that spend less is scary to them. These are all propositions that are asking people to understand and maybe do away with that shot of dopamine that you get from the excitement in spending your money. I often look at the paycheck and I often joke with my wife, wouldn't it be great if we could just take our whole paycheck one of these months and just blow it? I mean, hell, we're going on, 19 years of my current profession. And we have been on the same routine ever since I started in this organization. And a funny thing has happened over the last 18 years. My pay has went up, and it's went up significantly. My habits have probably at least stayed the same or actually digressed as we've been able to accumulate those things that really give us joy in life, save for those things that we really do put the most value on. I talked about those things, life changing things. And for us, it means travel. It's one of those things that we put a high level of value on, not necessarily selfishly for us, but for the opportunity that we can provide for our young children, as we tote them all over the world and drag them all over the place. Some of the cool places that we've been, Puerto Rico, the Caribbean, lots of places in Europe, as well as here in the United States, traveling and trying to see different things. We put a significant amount of value in that money well spent, right? Where I would just as easily find value in changing hands of stock without any real material thing to put my hands on. I find value in other buckets of my allocation of money. But the difference between me and you, my friends, and this is no knock on you, this is just an attempt to strike at your discipline, is that I look at forms of money in hundreds of different categories. You look at it in relation to two categories: inflow and outflow. And some of you guys are like, I've been with you a while, Ryan. I get it, man. I actually do look at that. I have identified surplus. Good on you. The idea in this game is to understand that you'll never have it really figured out. Resonate with the idea that it is, in fact, an infinite topic. I'd like to welcome all the subscribers to the channel. Welcome back to the Friday live stream. This, in fact, for you guys that are new to this live stream, will understand it is the fastest 60 minutes, and in a few short minutes, you'll understand why. Be back with you in just a moment. Just chilling on a Friday, man. Welcome everybody into the live stream. So what exactly does it take? It's so funny sometimes when I find myself in some of the situations that I'm lucky enough to find myself in, and I don't fit the part. I don't have a $5,000 suit. I look at some of these folks and they just look like money, man. They're just like, yeah, it's pretty impressive, man. I look at them and maybe it's the fact that I really don't have an ego about how I carry myself. I'm very, very proud of where I come from, and how humble of beginnings I come from. And quite frankly, it's a lot of where I glean my perspective on money is that I do come from those humble beginnings. But what does it take? What are the attributes to actually be a good wealth builder? Um, what type of statute does society dub on you to somehow lend your opportunity in financial markets maybe more than the next? In other words, why do people enter into retirement financially settled or unsettled? What is the differentiating factor between those two lives? Okay. We're all going to live nice long lives amongst us. Okay. We all started on this and we were all given a boot in the ass when we came out of the chute. whether or not we were ready to start the race or not. But here we are, and it's called life. So this is one of those things that I talk along as far as one of those things that you can carve out in your life. And once you carve this bitch out, you can have it set so you can focus on that cool stuff that I talk about. All right. I'm in the gym every single morning at 5 o'clock every morning. How many of you guys did that this week? How many of you been doing it as long as me? I've been doing it for years. I love it. It gives me more energy. I don't think I could do that. Yeah, well, it's amazing what you can get over on yourself if you just suggest, look, there's nothing bad that's going to come out of this. As a matter of fact, the scarier question is, what do I have to gain out of this? What type of reputation do you have to have? What type of reputation do you have to carry as a wealth builder? Is it something that you're afraid of? In other words, how will people view you if you do have some sort of financial security? And finally, what type of expertise do you have to have in financial markets? These are all the things that we challenge as far as the level of expertise that people think that they have to have. The comment to me that the recommendation for people that are getting started in financial markets have to seek out the services of a financial planner professional is a notion that I wholeheartedly disagree with. I give people more credit. That very statement actually impugns the very intelligence that I think that people inherently have. They just need to push the go button and put it to good work. Yeah, yeah, yeah. I think people are trusted to do a lot of really, really amazing things. I got Rebecca in the group here, right, who is in healthcare. And I'm quite certain that day to day, she's probably providing service that is absolutely invaluable, that I couldn't do it. A lot of people can't do it because she's a professional and that's what she does, right? To provide that value. I think the expectation of her as a professional is one that we kind of take for granted, right? When we go and we seek out our medical professional services. But when we look at the financial and investing realm, it's all too often set up to be something that only few people can play in. I totally disagree with that. The power of financial markets is one that you really need to discover on your own. And the discovery that I expect that you'll have is to take that starting amount. Let's just call it a nice, cool $100. Nice, cool $100. And it will be that very introduction to the market to see that $100 either digress in value or increase in value. It will be the very fact that those dollars go down to $99 and you can come back and you can unsubscribe to the channel because you're going to prove a point that you're pissed off at me for destroying that $1 of net worth for you, or you're going to make that first dollar unbeknownst to you, unbeknownst to everything that you've been told, unbeknownst to how you need to seek out the services of a financial planner and absolutely cannot do it on your own. The very fact that you feel like you can actually introduce capital to financial markets and make it on your own with a low cost ETF to the S&P 500. It's crazy talk. It's crazy talk. That money will sit at 100 indefinitely for the next 40 years. If you don't pay somebody 3% to manage that money and infuse it with a consistent cheering squad, right? Bullshit. It's the middleman. You ever heard the term eliminate the middleman? You'll get more coaching and motivation from me for free. You don't have to buy my t-shirts. All right. If you feel like the time is so important that you're missing out on investing study time, certainly I would suggest you go pick up The Intelligent Investor or any other of the wonderful investing books out there and start to learn this topic of your own. But as far as my philosophy on money, I'm right on the money, right on the money. We were talking about, no pun intended, talking about some of the validation through some of the passive investing that we engage in, hundreds of thousands of dollars wrapped up in financial markets in the capacity of index funds and ETFs. And you want to know something, guys? I give you a little secret, and this is a secret of the pros. Okay, the people who are money managing and the hedge funds and those folks out there that are buying stock for a living and they're stock experts, they're buying and selling stock the same as me and you. Okay. Um, and for most people out there that do not want to spend an iota of time looking at their portfolio, they just want to establish a nice wealth building program for themselves. The S&P 500 does that. Okay, you get established in financial markets, the large cap financial markets, and you could turn a blind eye to that investment over the next 40 years. Come back to it, look at it, and then you'd be like, "Where's that Ryan guy? I at least owe him a pat on the back," right? Because he provided all this incredible information through the fastest 60 minutes on YouTube. And lo and behold, the joke was on everybody else because he was putting down some pretty badass information throughout the course of, you know, um, social media interaction with people. The thing that makes me cool is I say what I want. I say what is going to convey the message most clearly. And I do it for 60 minutes straight, which actually crushes any opportunity that I have for Google to pick my stuff up and actually think that it's going to keep the attention of these pea brains that have about 8 minutes and 8 minutes tops to catch my message and get any value out of it. I could care less. I'm not really interested in sowing the oats for those people. Mhm, mhm. I'm not really interested in trying to establish a game that requires patience for people that don't have patience enough to watch me. Now, if they can go and deploy what I talk about, they can get the message in a couple of videos from me and they can go deploy and they can really understand it. Because again, I'm not one of those folks that patronize people. This is not hard. It's easy. It's not hard. It's easy. So why in the hell do we continually subject our money to the whims of a third party? Super, super important. The next is who can succeed. Can you succeed? You don't come from money. You're destined to failure. Your mom and dad never jammed that silver spoon up your ass, just like everybody else you see driving around in Mercedes Benz. Three quarters of those are leased. Three quarters of them are leased. The rest of the folks that buy obnoxious vehicles probably have no business buying those obnoxious vehicles anyway. They do it for the show of it, and it really doesn't mean anything. As far as the optics that I will award you, I'll acknowledge that it's a nice rig, and that's it. I won't award you intelligence because you drive around an expensive car that you can't afford. Mm-mm. You'll get no sympathy from me when that rock hits the windshield and breaks it, or a rock chip hits the door and you didn't do paint job. You'll get no sympathy from me. None. Zero. Your priorities are effed up. It's not my fault. It's yours. My priorities are just fine. hmm I justify buying stock, something that can actually appreciate in value over time. That's what I justify. You might come back and say, you're a cynic, Ryan. That's no way to live life. Enjoy your money. I've heard that before too. And I respect that. I've got friends of mine that would consider what I do crazy, crazy. Um, and to each his own with regard to the program that you deploy. But when I come back to who can succeed, the very fact of the matter is that a lot of people are entering into financial retirement financially insecure. They are unprepared to enter into some level of financial security. They had more potential to be realized, but just realized later on in life that they never realized that potential and it turns into regret. Um, so, who can succeed? Is it the rich that comes from rich? Is it generational wealth? The statistics would provide you some insight to understand that that's just not the case at all. It's not the case at all. Those people who are gaining wealth in life are those people who take a personal initiative to gain that wealth. And it doesn't matter if you start from zero. It doesn't matter if you're a dipshit like me and start from the negative integer. I mean, I started from around, I don't know, negative 10 grand, negative 8 grand. Who cares? It was on the left side of zero for you guys that are keeping score. Now I have no debt. Um, Certainly $1 million net worth, over a $500,000 portfolio. I built it from nothing, zero. Why? What separates that? Did I come from a rich family? No. Was I predestined? Whatever the F that means. Was I somehow lucky? Did I have a life-changing event that thrusted me into the realms of financial success? And when I say that, 5 years from now, I will be in a significantly much better place than I am in now. In 10 years, I will be in a significantly more better place than 5 years from now, and so on. And that's just the way that it is. Because my mindset is geared around what it takes to actually accumulate and preserve wealth. It's that simple. If I could bestow it to you, I would. And that is very, very much the essence of the channel when we come on every Friday and we talk about this topic. If you are a hard worker, does that render you eligible to financial security into your future? There's a scary question. Yeah. A lot of people would suggest, yeah, the old cliche is work hard, and you'll get there. I've seen evidence of that not being the case. Will you need a little bit of luck? Yeah. Um, I've seen colleagues fall victim to health situations that are just downright heartbreaking, and they cannot continue to work and maintain that way of life, and especially that income threshold that they have become accustomed to, and they've got to really, really forcefully digress their situation. So does hard work pay off? Look, here's the way I look at it, guys, and you can agree or disagree with me on this if you'd like. I am wired in a way that gets a lot of satisfaction out of my job if I sell out. And I can go through my day and I can pick two or three or four or half a dozen things that I have accomplished during that day. Now, there's no one time out of the last 18 years in my professional life that I have left the office and had everything 100% complete. It just doesn't happen, especially in my profession. There's always lingering things to do. There's always studies to do. There's always professional classes to go to, et cetera, et cetera, et cetera. And at the end of the day, I do walk away with some sense of completion in that I have put some real effort into my day. You could call it hard work. I would wish upon anybody work ethic, because here's the thing: if I'm going to fail, in other words, if I'm going to reach retirement, in either case, hard worker or not, I'm going to look back and say, it's my fault. It's my fault. If I'm able to accumulate some wealth in later life, I'll look at it and say, that's my fault too. In all fairness, right? I'm kind of working toward that end. I look at it now and just acknowledge very, very simply that I am on track. Could the wheels spin off the tracks and just, the stock market go up in hell and it doesn't exist anymore? Sure, crazier things have happened. Um, it's one of those things to where I've looked at all of the avenues of wealth building over the course of my life and have substantiated the rational decision to become a participant in financial markets over and over and over again. That validation has come through real dollars earned. I talked about the 82 cents. And some of you guys might think, who the hell is this nut job talking about an 82-cent dividend? I talked to you about that to drive home the point that out of 150 stocks, right, times 4 dividends per year, that is 600 payoffs. 600 payoffs throughout the year that I have injections of capital into my account. Now, you take that 1 year and you times it by 5 at that level of performance, times 10 and times 20 and times 25. And it really starts to become very, very crystal clear and apparent of what I am trying to do, buying into the philosophy of allowing my money to work for itself, right? Work for me, okay, without a lot of input after the initial start of that capital in a proper investment vehicle. It's a beautiful thing. Um, I love this shit. I love it. hmm If for nothing else, some of the attributes that you would judge a YouTube creator on would be, what's this individual's motives? What's their motivations? What's their command over the topic? Is fair on love and war. I was away from social media for the last couple of weeks. It was a very, very nice break. I come back to social media. I open up the comments section and it's just like hate, 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 hate. And I'm like, interesting. I was a pretty happy fellow the last couple of weeks when I kind of blocked that stuff out. You know what I mean? That's why I do this project so intimately, because I think the people who are patrons in the live stream really do appreciate the message and they appreciate what I'm trying to drive toward. What is my motive? Well, I'll tell you what my motive is. A dollar earned for you is a dollar of success in the right direction. Furthermore, a dollar is not that much money, hate to break it to you, but the psychological advantage that you can gain by proving to yourself that you can use money to make money is significantly greater than the impact of that hubba bubba that you can buy with that dollar, or that breakfast burrito, or that small coffee at the gas station. I don't know. Can you buy it for 99 cents anymore? I don't know. The impact of proving to yourself the power of that money is far significantly greater when you believed that the only way to make money is to go earn it via a salary or by an hourly wage. My friends, I'm here to tell you that there is a much bigger perspective out there in what you think you understand about money, and starting to identify all of those expenditures and understanding that when you put that spigot into your gas tank, that you understand the impact of that decision to pump fuel. Ryan, I buy a Tesla. Fair enough. You're missing my point altogether. Know where your dollars go and know why they go there. Furthermore, know where they're going insofar as understanding how much surplus capital will be left at the end, and make that your pledge to yourself to actually start on a wealth building program. It's really simple when we start to revolve around the psychological perspective of money, because the shallow perspective of money is coming to me and asking me to give you that magic stock that's going to take you to the moon in a week or 6 months, or here's a dagger in the side, 3 years. hmm Yeah, yeah. I had a comment come through the channel just tonight. A review broke my heart. I lost all my net worth on Hyliion Holdings. Really? What in the grand scheme of the 2,000 pieces of content that I put out would suggest that you take and dump all of your money on a speculative SPAC, come to public markets without any top end revenue, profit, projected positive margins, or a product to boot, and would somehow suggest that the only solution that you have, because you've lost your entire net worth, is to hold the stock that is even more speculative now than it was before. Yeah, I'm fine. I'm fine. It's an isolated stock position amongst a total portfolio that is ironclad, and a perspective that is probably 10x as ironclad as the portfolio as it is, because I'm the administrator over that program. And very rarely do I ever find anybody that is as ironclad as me in my application Guys like myself can absolutely buffer a bad beat like that. And I would expect a little latitude on the channel like that too, because in 5 years, it's not going to effing matter. It's not going to matter. I think for you guys that understand that you're part of something special, you truly understand that the expectation of me is to not come on and deliver perfection. Now, I will say this. I will say this, and I've been fine tuning some of my dialogue on the YouTube channel to focus in on what is right. Um, I got sidetracked, and the opportunities that were brought to me were brought during a time that I was a little more subjected to taking on those risks. That, my friends, is over. That will not happen ever again. Um, you know, am I still involved in the trade? Yes, I'm involved in the investment. I'm happy to do so. I'm disappointed in how things have unfolded. However, I have taken some radical steps to get back to roots, and I say get back to with some sort of an illusion that I moved completely away from what I have um, proven to work and what I have taught upon on the Independent Investor channel. I have consolidated my accounts. I have liquidated my Robinhood account. I don't have it anymore. I've liquidated the Webull account. I don't have it anymore. I've liquidated the Charles Schwab account. I don't have it anymore. I would have liquidated the Bitcoin account, but Bitcoin caught some fire, so I decided to keep that in there. Albeit, I'm very, very disappointed with that broker in that pulling your money out of it is very, very difficult. It's like an act of God. They make it super, super impossible. And if I have any opportunity to blow some fire into the upper management's ears on that, I will absolutely do it because there's no reason for it. However, I'm making a crush on Bitcoin right now, so we ended up keeping that account. M1 Finance is one of those funny accounts that if I were going to give you my honest opinion about, I love it. I love it for all the reasons that I loved it on the onset of entering into M1 Finance. And I love it more now when I look at the results in those portfolios and there is merit behind it. I come on, I talk about these philosophies of investing and putting your dollars in a program that works. It's validated every single day through the application, made possible in no short order by M1 Finance. And I love the accounts. I will keep them indefinitely. I really like them. Now, once the accounts get up to about 100 grand, I may look to swap them over and do a very arduous like in kind transfer back to the brokerage account. But until that time, I'm going to continue to dollar cost average those accounts. I really enjoy them. And then I have the primary accounts, and I'm looking to strategically fund to cash. That's another one of the things that I'm doing right now is funding to cash. So build cash reserves. I have trimmed some risk in the portfolio, closing out what was the SPAC era and closing that down in a relieved way. And if that stuff, which I am anticipating and presuming that they come by the channel, again, I am going to absolutely lose my effing mind if people want to challenge me anymore on what I talk about on the channel through fundamental passive investing and dollar cost averaging. That is done. That is done. Okay. Because for that one person, empowering one investor at a time doesn't resonate with people, then the message is not for you. You can go somewhere else. If you want to be part of a channel that the channel creator knows, not thinks, but knows is correct, and where I was misguided before to accelerate that path, that right there was the misconstruence of my own personal message, getting a little bit over my skis, and it happens. It absolutely happens. But as far as the fundamentals that scale to the masses and passive investing, it absolutely works. And I am going to be steadfast for the remainder of this project, however long I do it. teaching upon those fundamentals because they're easy, and they're fun, and making money is fun. And acknowledging that you might make an anemic 8 to 10% rate of return. Hell, you might go through some years where you actually lose 20% just as early as 2022 last year. I don't give a flying F what you think about that program, because for the people that want that instant gratification out of the stock market, I'm here to tell you that by pursuing those ends, you will be ignoring the very fact that so many people ignore out there, and that is the importance of acknowledging that there is two sides to the coin. It is a double-edged sword in that you invest not only to make money, but to also be careful to buffer your money and put on the best defensive posture that you can over your money to make sure that when markets turn south, right? And when fads come and go, that you're not stuck on the opposite side of that fad, hoping that at some point your net worth returns to something that it was before you entered into that fad. Okay. And that's just not going to happen. It's just not going to happen ever again. The last thing I will suggest is to continue to fund markets. We are heavily funding, and we have. Over the last 3 years, I have engaged on a very, very robust funding schedule. Funding to the tune of moving money into ETFs and passive investings within the Roth IRA, setting some strategic parameters over the Roth IRA so as not to put a lot of aggressive investments in the Roth IRA, to make sure that that capital is given an opportunity to grow over time, yes, but also protected to the downside, and that wealth is preserved over the long term. To establish and continue to pursue dividends. Um, I hate to declare this over YouTube, but not really. But when I look at that dividend portfolio, I cannot come onto YouTube and tell you that there is any negative behind it. If you're going to underperform the market, don't care. Don't care. It's my program. I'm making money. I'm doing what I need to do. All right. I don't need to make your expectation for my money. All I need to do, win, lose, or draw, in no short order, is to meet my expectations over my own money. And by consolidating the accounts, we believe that we have done that and look to become much more razor sharp in our application, and much more careful with our application as far as things that come and go. And I will still continue to speculate. I will continue to invest in the Aduro Clean Technologies of the world. I'm still invested in Hyliion. And we will continue to monitor those markets once they end up turning for opportunities going forward, because I enjoy it. And the ETF bucket of the portfolio is set. It's on autopilot. I put zero effort into owning the dividend appreciation fund in my Roth IRA. I put zero effort into owning the 100 shares of S&P 500 VOO in my wife's account. There's no effort into that. If I want to buy the markets, I do it. I monitor it. If it's down, I buy. If it's not, I leave it. It's that simple. There's no more that needs to be done over that in way of seeking a financial planner professional to somehow, I don't know, fluff my butt every 6 months and say, yep, you're doing a great job, buddy. Keep it up. Stay invested in the markets. Because when you stay invested, I make money. That was the Ken Fisher turnaround slogan, just made in a little bit different way, right? I don't know why we let these people off the hook, and I don't understand why we don't scrutinize them more. That's where I come in. Don't worry about it. I'll scrutinize for you. All right. But why do we care? I talked about entering into retirement someday, and taking the steps now to gain a little bit of discipline to accelerate or evolve your understanding of money, and it will evolve over time. You just need to put some fundamentals in place so you can start to practice this as a discipline. because that's what it takes. It really just comes down to discipline when we apply our program. We talked about how to succeed and then where to go for help. This is an interesting one. And my answer might surprise you guys, and then I'll kind of get to some questions, and we'll look to wrap down the live stream. We'll be off next Friday. I've got to fly to the West Coast for an obligation, so this will be the last one for a couple of weeks here. But where do we go for help? My answer is really gonna surprise you, and I hope it resonates with you, and I hope you take it with me as one of the many nuggets that you'll take away from the Friday live stream this time around. You might say, it's you, Ryan. You're awesome. We turn to you for help. Look, you can come to me as an example of somebody who appreciates money, who exercises his own personal discipline um, on a daily basis. Someone who respects the power of money and why we do it to avoid regret. Somebody who selflessly invests as aggressively as he does, with the understanding that potentially that wealth is being built not only for me but future generations. Right. All that said, those are attributes of why you can tune into the message and enjoy the message and feel like you're part of it. Talked about earning those dollars, and every dollar earned is a movement forward that is very, very powerful when we start to prove to people that you can use money to make money. What a concept. But where do we go for help? You really have to go and look within. I can motivate you. I can provide you counsel. I can throw some funny jokes out there about hokey pokey and fire loops and hubba bubba and shit like that. I'm real funny, right? But at the end of the day, you really have to look within and get yourself convinced that this is something that you want to do. Don't think for a second that you're going to come into the channel and you're going to hear something from me in way of motivation that's going to last you for the totality of your life. I'm not in your ear every day. I'm not in your ear every second. You are. You're the one that has to deal with your scenario, your circumstance. Nobody knows you more than you. Nobody has the potential to sit down and evaluate your personal opportunity, your personal potential, and more important, to understand your own personal pitfalls. What are you most scared of? What do you want to do? How do you want to do this? What type of investor do you want to be? You will be the best person to answer that question. So when I talk about where to go for advice, the last thing that you're going to hear from me is to go to Merrill Lynch or Goldman Sachs or Morgan Stanley. And I have enough wherewithal about myself to even suggest that perhaps maybe I'm not even the best source of information. And I certainly don't tear down other YouTube channels to suggest that they don't have the answers for you either. I would just put quite simply that you need to look within and you need to find that personal motivation. I've got it. I've had it for years. If it's an attribute that you aspire to and you respect about me on the channel, then you're seeing the right stuff. But make sure that you're deploying your own personal program for all the right reasons for you. Let's get to some statements here. Guys, if you got any questions, leave them here in the comments section. Got Jared's in the house. Manny says hello. Great. Good evening to you, my friend. Just glad to have you. I got some Vipers in the group here. Investing over time is an eye-opening experience for anyone because it makes you face a lot of realities on how the world works. I think in the investing world, Jamie, I think it just gives you the opportunity for mental conditioning. Buying markets when they're down is an unnatural thing. When the markets are doing really, really bad, there's nobody at work that comes to me and says, Ryan, are you buying markets now? Well, that's the very time that people should be coming and being like, hey, Ryan, you're buying markets now, right? And I'll be like, yeah, hell yeah, of course I am. You? Yeah, of course. It's not like that. It's times like these that people are like, Hey, this year-end rally, it's been going for the last 2 weeks. Maybe I should like hyper buy the market now. And I'm like, oh, I don't know. I've been invested in financial markets the last 30 years. I don't know. Just another day to me. I don't sweat that stuff. No problem. I would be more apt to actually save aggressively to cash right now with the market up huge, as opposed to just panic race into the market because it's up. I'd be less apt to buy now that it's up. But to your point, absolutely, these are the very disciplines that we want to revolve around and teach people that it's okay to revolve around these disciplines and look to strengthen those disciplines. Very cool. Would you listen to first a random YouTuber or Kramer? Neither. Neither. I think it's a fair, you know, look, you can listen to all kinds of people. Okay. I'm not suggesting that you don't want to try to self educate yourself on the topic, resonate with those things that really make sense to you. But man alive, you have to operate with some caution because in the money game, there is a lot of there's a lot of hidden agendas that exist with financial planning through fees. There's a lot of agenda. Jim Cramer has a product that he is selling as well. Dave Ramsey, you guys don't think that Dave Ramsey has a product to sell? Come on, guys, wake up, smell the coffee a little bit, man. I just choose not to buy into any of that crap. None of it. Who would I listen to first? Me, by far. There's not even a close second. The most helpful investor and most influential investor for the independent investor, Ryan, yours truly, me, has been Tony Robbins, not a financial analyst, not a stock market guru, a life coach, Simon Sinek. These are the personalities that I would listen to because they talk about the psychology behind buying the Hubba Bubba and why I feel so good for 37 seconds after buying the Hubba Bubba and have that shot of dopamine and that sugar rush when I chew Hubba Bubba and what that means to my bottom line. I'm more interested in that type of deliberation and understanding. And that's certainly an insight on whether or not everybody should blindly follow Warren Buffett. Coca-Cola is bad for you. Coca-Cola is not healthy. Okay, as awesome as it looks during the Berkshire call, and both him and Charlie are up there drinking Coca-Cola and chewing on bonbons or whatever the hell they're chewing on all the time, Cadbury or whatever it's one of the chocolate companies. I forget it. Those things are bad for you. Coca-Cola is bad for you. It rots your teeth. Okay. Yes, they have an established moat. I get it. But at the end of the day, all right, you don't have to blindly follow these people just because a YouTuber come on and says, you know, these YouTubers are all idiots. They don't know what they're talking about. Or boy, very, very few people actually excite me anymore. Like, what's that about? I don't think anybody is that special on YouTube, and I don't care if you have 1 million subscribers or if you have 10. It just doesn't bother me that much. I think everybody needs to get over themselves and realizes that the stuff that comes out of their backside smells just as much as the next person. That's what I think. That's my 2 cents for sure. Somebody told me the same thing. I wonder why he said he lost it all while I sold and took all to buy blue chips and undervalued dividend stocks. I tell you what, man, Jamie, it's like I'm constantly deliberating on what I've done and what I should have done and what I shouldn't have sold and what I should have sold. You know? All of those questions are removed quite simply by buying the highest quality assets out there. And if you didn't even want to do that, to just enter into passive investing, you know, uh, if that's your game, I would even introduce the possibility of mutual funds getting you to a specific end, a very, very low maintenance and oversight toward owning a mutual fund. Right, the longer you own it, the better it should do for you. Indexing and ETF investing as well with the low cost avenue of passively investing markets. But I tell you what, my brother, it is the golden question, and financial markets are not one of those things that that there's a swath of people who have it all figured out. You know, it's amazing how something like the stock market can be right in front of a lot of people's face, and still look to trick even the foregone experts in financial invest. It's a quite an intriguing thing. And so the idea is to corral financial markets, not necessarily control them, or look to beat them. I think once you think you can accelerate, or start to game the system and get ahead in that capacity, I think you'll find quickly that you're probably a little bit over your skis. You're just a little bit too big for your britches. And look, I'm not saying it's not possible, but for my message and scaling to the masses, we need to talk about fundamental wealth building. And I tell you what, when at the end of our lives that we are gifted, we'll be better off for it. Risk mitigation, you've always stressed this on your channel, and that is so important, yet it falls on deaf ears, unfortunately. I do feel like it falls on deaf ears. I think when people do look at, let's say, S&P investing, they look at it and they're like, I want more than 10%. Okay, you want more than 10%. I wish you all the best in the pursuance of that outperformance. What I would suggest, to your point, is that people do invest in other capacities and they miss that defensive buffer of trying to pursue not beating or underperforming the markets, rather meeting the markets or matching the performance of the S&P. If you invest in VOO for 365 days, you're going to have the best chance of mirroring the performance of that market. Now, what's funny about that is out of those 365 days, if you took 2 days off and you sold everything, and that was the 2 days that those markets, look what it's done over the last couple of weeks, and you missed out on a couple of points of appreciation, that can really hamper your bottom line. So it's to do or not to do when you're looking at long-term investing, and it's very, very important to stay the course and get that time logged in the market to get the maximum performance out of the market. But yeah, it's that downside protection is super, super important, and it's one of those things that, man alive, when you invest as long as me, you've gone through some real swoons in the market. And the real solace in making sure that I could see my way out of those markets were the fact that I was passively involved in the S&P 500. What do I do now? What do I do now? Holding a single stock that has really no promise of turnaround. What do you do? Is there a light at the end of the tunnel? No, there's not. And if that's my only holding in my portfolio, it can be a real drag, and it can be a real stressor, man. It's really tough. Andrew says he's joking about Kramer, poking fun at the YouTubers too, for sure. You know, it's all good. Truly, I invest in things that I think the planet needs: wind, solar, batteries, the materials involved, recycling, and renewables mostly. Yeah, have some interest there to define your investing style is important for sure. But also understanding that just because your interests are in those different categories, perhaps maybe it's understanding, just humbling yourself to the whims of the S&P 500. I mean, International Paper, a company that nobody has ever heard of before, might end up outperforming, and the collectively the S&P ends up performing from a group of stocks that you've never even heard of before, and it really does augment that year over year performance factor that we're looking to place over our money to get that compounding interest started on that money. So very cool stuff. It's a great stream. We enjoy the message. See you in a few weeks, man. I appreciate you, and I appreciate the support of the message for sure. Hope this one hit home. This was probably really one of the most important live streams that I've ever put down. I was on point tonight. For you guys that made your way into the channel, you were in for a treat. Hopefully that really does help you not accelerate, but help you evolve over time. No matter how much time it takes, it's important to make sure that we're putting in that ample time, to make sure that we're progressing toward a productive end. And that's really what we're looking for, man, to end up in a place better than where we started. And that's the key. So when we look at the power to change lives, I would contend that in some small fashion, maybe even in a large capacity, the Independent Investor Channel and what we put down here in the fastest 60 minutes for a lot of people, and the scalable message has the opportunity to do just that. And we'll continue to throw down. Again, I remind everybody, if you like the message, subscribe to the channel. Certainly. I appreciate each and every one of us devote subscribers to the message. We'll be off next week. We'll be back in 2 weeks. Guys, be well. Happy Veterans Day this weekend. Be safe, and we'll catch you in 2 weeks.
No!